Hey, all right. What's happening, Kyle? Good morning.
Morning. How's it going?
It's going, man. It is morning for both of us. It's 10 o'clock in the morning here on the East Coast, and I'm
Yep.
getting ready to play some golf today. So that's why I got this fancy collar on my shirt.
Good stuff. Well, today's March 11th. It's Friday, so we'll see. We're going to close out a kind of another boring week in a way. If you really just average it out, it's been volatile. But what's interesting is I've got my screen up right here for the S&P 500, and what we're doing is we're just sitting below all the moving averages, it seems. And what I haven't seen is capitulation. Where's kind of that exciting moment where the market washes out and goes higher. So, I'm not quite sure what to think here. So I've got you here with me, but what are you thinking? What are you looking at?
Yeah, I think boring is probably not the right way to describe the week. There's it's been the VIX has been hanging pretty tight over 30. It was 35 at one point, hanging over 35 for a while actually. So yeah, I don't, boring in context of not much movement. I think from the beginning of the week to the start of the week overall, but in between there's been a whole bunch of movement. It's interesting on your screen right now, because you're using the candlestick version of the S&P 500. It kind of looks like the market made a higher low. Like, I don't know if you can hover your mouse over that recent low candle. What day was that?
Hmm.
Yeah, that one. That was 3.8. And then the green candle, the lowest point was a few days before.
Yeah.
Was it? No, 3.2. Like, go back. Back. The low end of the green one. The lowest one. There you go. 224. So from 224, like from the bottom of that candle to the bottom of the next low, like it kind of looks like the market tried to put in a higher low when you look at it that way. But on a closing basis, it doesn't look like that.
Yeah. And that's what's been so interesting. If you went to an hourly chart, even last night, we had a nice rally up. We were getting close to that 4,300 level, but we're still not holding it. So today it's pulling back a little bit at the open. And that's what's so fascinating. It just hasn't had that clear direction, or, when I talk about excitement, just a real washout or a push higher. We're just kind of coiling in this level.
Yeah, just I don't know. We just, as I wrote in the Elevate Capital Market commentary, I guess was out last night. So for those of you who haven't seen that yet, go take a look at that. Can we both share our screens at the same time on this Zoom call? Is that possible? I don't know what it'll look like, but
You
I'll
well, you
try it
can
real
take
quick.
it over.
I'm gonna try something a little different. Hold on. Where are we at? Yeah. Does that work? Can you see it?
I'm not seeing it. So if you want to just take it over, I'll let you walk us through the charts.
Yeah, I don't really want to do the charts on Thinkorswim. That's a Thinkorswim platform for those of you who don't know. And it's just, I don't know, it's too hard to read. It says I'm sharing my screen, so I wonder if other people can see it. Just stop sharing yours real quick and mine should take over.
There we go.
There you go. Participants can now see your application. Hey, how do you like that? So anyway, yeah, I wrote in the commentary that this is basically what we're doing. And I mean, this is, from Kyle's, if we just change it to candlestick, like what Kyle's look like, what I was talking about is there's this, it kind of looks like the market was trying to make a higher low, from right here to right here, if you look at the candlesticks. But again, if you don't look at the candlestick chart and you just look at the line chart, that this line doesn't connect anything. It's just in no man's land. And so what we're really seeing is that the market just continues, to basically make lower high, lower high, lower high, lower high, and then lower lows, lower lows, lower lows. And in the pre-market this morning, we got a nice big rally from the pajama traders, as I like to call them. And then it immediately sold back off, and now the markets are I think mostly down so far for today. No, S&P is still green, but the Nasdaq is down for the day after being up I don't know, 1.5% this morning in the pre-market. So as soon as the market opened, all the sellers took control again, and back down we go. So I think right now the bears are still in control of the market. We just keep making lower highs and lower lows. And as I was talking about in the commentary last night, which again you can find out here on our website. If you go to our website, hover over commentary and then click commentary. I don't know why we have two commentaries there. I might have to fix that. But anyway, March 10th commentary is out there, and yeah, it was what was I? What the heck was I just talking about? I don't remember. Anyway, whatever. Not that important, I guess. So bears are in control. We're probably heading even lower until we start putting in a higher low. I don't really see any reason to get aggressively long this market, and with all the conflict going on and all the headlines driving what's going on today, you just never know what the next headline's going to be. So for now, I'll just stop sharing that. But yeah, it's a volatile period. Volatility's out there, even though we haven't really gone anywhere this week, like you were saying at the beginning.
Yeah, and I think what's interesting is while it hasn't, gone anywhere, so we're looking at 4,100 on the S&P is really a key level of support, but then 4,400 on the upside, we haven't broken that either. So we're just stuck in this range, and it'd be interesting to see where it goes from here. But it is interesting it just sitting below these levels and not really making a move either way. I think that could develop here in the next week or two, but right now, hard to make a call anywhere, but good time to play defense.
Yeah, when did you say the Fed meeting is? Is it Wednesday next week?
Yeah, so the Fed meeting is Wednesday next week. And do you know, I think on that one, we're looking at a 1/4 point hike.
Yeah, that's yeah. Again, I mentioned that in the commentary too. The Mr. Chairman Powell, when he was testifying for Congress last week, said that he was planning to propose and support a 25 basis point hike in interest rates. So that's what I expect to happen. I'm sure there will be a few of the governors who propose something higher than that at 50 basis points. But I don't think that's likely to be the case. If they hike by 50, I think the market will be surprised and probably sell off harder, than it would if they just do the 25 basis point hike. So I do think there's a little bit of risk to that, but I don't think it's very likely they go by 50 basis points, especially with the conflict in Ukraine happening. So we'll see.
And it is interesting, we're raising rates into a period where we don't have that growth that's taking out and everything looks rosy and perfect. We're raising rates going into a potential war, and we are having, commodities are running up, and it's really getting expensive for the average everyday consumer out there. How do you see that playing out in the markets, and particularly oil? So looking at that, we broke over 100 a barrel and hit 130. We've pulled back from there, but I know you talked about that in the report, but what risks do you see with raising rates in front of, I guess, commodities going up and everyday expenses, but growth isn't really there as much as we'd like it to be?
Yeah, well, the first thing I'd say is that in the commodities markets, right? The commodities markets they're just boom bust cycles. That's how the commodities market works. They boom and then they bust, and that's never going to change. I don't care how much government interference they run, how many times the Fed tries to get in and control various things about the markets. It's just simply never going to change. And so if we look at just crude futures, look at this back here. Oil cost negative money. This was April of 2020 when the global economy was shut down during COVID. Oil cost negative $37 a barrel, which is just silly, And from those lows, we are now up 387%. I don't know how they calculate that percent using a negative number, but whatever. That's what it says at the highs a few days ago, up 431% from those lows. And so, man, oil's been on a tear. But if you widen it just a little bit more and go back to 2008, it's still not back to the ultimate high that we reached, up around $145 a barrel back in during the great financial crisis. Um, which, I don't remember what drove. I guess it was just peak oil thesis that even Warren Buffett fell for and ended up buying ConocoPhillips and lost a bunch of money on that. The capital intensive oil business is not where Warren Buffett usually hangs out or writes about or anything like that. So, I mean, it's interesting to me that it got that high to begin with. It's almost as interesting as it got to negative $37 a barrel when they shut down the global economy. But I mean, I don't know how much people remember about that, but there was like, people were like renting oil tankers and storing oil on tankers out in the ocean and just anchoring them there until they could actually sell the oil for a positive value. I
Hmm.
mean, the markets were in like a really, really weird space, obviously. Um, I probably should have taken delivery on a few barrels of oil. Got paid to take delivery on a few barrels of oil and just sat on them for a couple of years. I could be selling them for looks like $108 a barrel right now. So anyway, the cure for high prices is high prices, right? When oil goes up to a certain level. In fact, if I zoom back out, back here in 2008, remember they started building like, well, I guess it was before that, when oil was cheap. They started building these like Ford Excursions and stuff like that. The most giant SUVs that we've ever seen, ever. And they got terrible gas mileage. And by the time oil got up to those levels, and we were in the middle of the great financial crisis, they like stopped making the Excursion, if I remember right. I don't know if that's actually. I'm pretty sure that's true. I'm gonna
Yeah.
I'm gonna I'm gonna find out.
And I
But I mean,
know,
those are the things that'll cure the high price of oil.
yeah. And it's interesting. The environment we find ourselves in today is one where politically we're really trying to move towards, electric vehicles and away from fossil fuels. And what's interesting about that is, I was just thinking about last night. If I'm ExxonMobil or any other energy company, I don't really want to go invest in new infrastructure to help with refining oil or finding new oil because, if I look at the cash flows that I'm going to generate 10, 20 years down the road, I might not see that it's going to be a positive cash flow. So by not investing in new infrastructure and build out, you could get an environment here where we don't have the new oil coming. And even if we drilled, it's just hard to motivate the energy companies to drill too much or to build that refining capacity. So it's kind of an interesting spot where, we've kind of cleared that period in between now and '08 where you could see it go a lot higher simply because, the demand's there. But the companies, like I said, ExxonMobil and some of these other big energy companies, they're not necessarily motivated to make long-term investments in, infrastructure to build out the refining capabilities or the, exploration.
Right. And meanwhile, check this out. I just put it on the screen. Hopefully you can see it. This is literally a couple weeks ago. Um, largest one of the largest discoveries in the past 20 years of new oil. Just to be clear, there's no such thing as peak oil. We are never going to run out of oil. Not ever. Not ever, ever, ever. Not in your lifetime or my lifetime or our children's lifetime. We're not ever going to run out of oil. It's it's never going to happen. And you know, every time they say stuff like every time oil gets to a price like even back during peak oil, oil got to a high enough price that the how am I trying to say this? The oil that was previously unrecoverable became recoverable because the price went up. Because the price went up so high, the oil companies could actually afford to invest in the technology to extract oil that they were previously not able to get out of the reservoirs that were already drilled and already existed. Like when they create an oil reservoir or when they drill for oil, they're never able to actually get all 100% of the oil that's in there out of there. Um, a lot of times there's just a ton of oil left over that they can't get to. But the more expensive oil gets, the more they can invest in the technology to figure out new ways to recover that oil that they already know is there, let alone discovering new oil. So, I mean, this discovery could contain 100 million barrels of oil just by itself. And this isn't the only one. Like, they're always discovering new oil. It just doesn't get that much press anymore because not everybody's talking about how peak oil exists and we're all going to run out of oil. And I mean, it was just such a silly event in the world. Like, just mass delusion by some of the smartest people in the world, and all that stuff can still happen today. It's not like peak oil was an anomaly. It's stuff that is constantly happening. It's just a new headline, a new thing to focus on, that because the news media tells us, oh, we should be worried about this or scared of that, and people catch on. And I was reading something the other day that called essentially Putin thinks of the green energy lobby as useful idiots. That was the term, useful idiots, because they drove Germany to close every form of energy production that they had other than solar and wind. And it's not always windy in Germany, and it's certainly not always sunny in Germany. I don't know if anybody's been there. I actually haven't been there, but I've done a little bit of homework on this. But Germany gets most of its energy imported from Russia because they don't produce any of their own. They shut down all their nuclear reactors, and people in Germany are paying the highest prices for energy that they've ever paid ever. And Putin knows this. He's not a dummy, and he's using the entire situation to his advantage. And he's kind of got the world under his thumb. They don't have that big of an economy, but they do export quite a bit of energy to Europe. And so we don't do much business with Russia in the United States directly, but because Europe is going to try not to use Russian oil, they're going to go to other parts of the world, namely the US and Saudi Arabia, and bid up the prices of that oil. And so there's just more competition for the barrels of oil that are not coming out of Russia, and that's what we're seeing with prices today. So, that's how we get to where we are in oil prices. But like I said, I mean, the cure for high prices is high prices. As prices goes higher, as the price goes higher, people will figure out how to drive less. We'll figure out other ways to get around. We'll figure out people will travel less. People will fly less. People will take the bus less often. Like, everything will happen so that the cure for high prices is high prices, and eventually they'll crash, because what will happen next is that we'll probably overproduce oil to a point where the supply outpaces the demand, and at that point we'll I don't know if we'll get back to negative prices, but that's exactly what happened during COVID. Was the price got so low that they figured out uses for it, and now here we go.
Yeah, and I think part of it too, just always to remember, is long term versus near term. In the near term, this chart is certainly bullish and appears to be leading higher. And that transition from fossil fuels to green energy certainly could create a near term bull run in all commodities, or especially oil. But then longer term, we could certainly see it kind of taper off a bit and move, but that just takes time.
Yeah. What are you watching these days? What are you trading in your own personal accounts?
A big thing I've been watching is gold. So
yeah,
I think a lot of people have been paying attention there, but I'll just pull up a chart here. So, gold right now, just kind of stepping back. And are you able to see my screen?
I do not see your screen yet.
All right, here we go.
We should figure out if we can both open the same trading view chart at the same time. I think we can.
But, so I'm just looking at a weekly chart on gold here, and we saw it just in the last week or so. We ran up and we hit this high that was set, over a year ago back in July, and rejected. But what's interesting is you have the fundamentals lining up. You've got war on the horizon, or a potential war. You've got inflation. It's the perfect recipe. And, I've been trading gold for a while, and I've seen $100 moves, happen a few times on lesser news than what we're looking at now. And this you would think with everything that's been breaking on headlines, we would have broken right through that high that was set over a year ago. And we're maintaining the trend up, but I'm just not seeing that move I'd like, where it just blasts through those levels. So it kind of makes me skeptical. And then you start going into that crypto conversation and think, is crypto it? But what's been so interesting with crypto is crypto's really kind of been correlating with the overall equity market, which tells you that when there's a heavy risk appetite, people are buying crypto. And when risk is off the table and they don't want to be involved with risk, they're dropping crypto. So yeah, that's been an interesting trade for me. I don't know what
So
your thoughts
are you still long it?
on gold.
Yeah.
Still holding some positions long,
Yeah.
but it's light. It's just kind of trailing a little piece of it, but it just, it needs a break when you have a high volume candle like this. So you had that big run up and you had really high volume, and then you had that big washout. It just takes time. So it kind of needs to build that base again before you really want to get too aggressive again.
Yeah, I almost won a bet that I've had running for a long time with a buddy of mine. We bet a bottle of Duckhorn Cabernet. I don't even drink anymore, but it's going to be my trophy. I'll probably hold on to it for a long time when I finally win, because I'm still pretty sure that I'm going to win that bet.
Mhm.
I'm gonna share my screen. Sorry for all the flipping around, everybody, but I think it's I've got something on here that, so like, I don't remember when we made the bet. And I'm gonna switch back to the candlestick chart because it just works better, and it probably works even better if I do a weekly chart. Where are we at? Yeah, here we go. So so this is, gosh, this is actually a couple of years worth of gold prices, which is pretty cool. But if I look at the weekly chart for gold, back here, I don't remember when it was I made this bet, but it tried to break out right here and kind of failed. And then if you move the line here, this was the real breakout to buy. And this orange line is, see, Scotty owes you a bottle of Duckhorn Cab. Bet was made 3/17/21. So 3/17/21. Where's that? Call it like right here. So right here, Scotty, my buddy Scott, he said that gold would drop below $1,400 before it made a new high, and I said I'm taking that bet. That was right here. So from here, gold would have had to drop 19%, or it would have had to go up 20%. So he was closer to his winning bet than I was when I took it. And I said, there's no way it's going to go higher. And I don't know really why I thought that, but I just kind of thought that overall gold's in a long-term uptrend, and all the government ever does is just print more and more and more and more money. Right. And so the farther I go back, the cheaper gold gets. I mean, if we go back all the way to the 70s, gold was, oh geez, I guess we don't get back to the point where it was like $35 before they ended the Bretton Woods, gold standard stuff. But I mean, from here, gold has gone up 2000%, and it's unlikely to ever change because gold is the one standard of value that's been around for thousands of years, and the government just continues to print dollars, which gold is priced in dollars. So every time they print another dollar, gold becomes more expensive in terms of dollars. In fact, you can look, if you look at gold in terms of the Japanese yen, it's up even more on a percentage basis because, the yen is one of the most inflated, currencies in the world. That's why it costs like 10 million yen to buy a Coca-Cola. Just crazy how that,
So
I don't really know that that's the exchange rate, by the way. I just know that it's always like some million number of yen to do the same thing that a few bucks will do.
So do you think on this one, is this breakout for real this time? I know we've had a lot of false breakouts on gold, and it's been a little frustrating at times.
Oh, I mean, there's no doubt that the breakout has happened. My only concern now, going back to the daily chart, is that we literally got within $10 of me getting my bottle of wine and it pulled back. And so, this was the old high and we got very, very close to it, on an intraday basis. My buddy Scott keeps telling me, he's like, yeah, we'll look back at 2012. So this area right here on the chart, right? Look what happened here. if you use this as the high, same thing here, right? It got within like $10 of that high. I'm not using this one. Because that one doesn't really work for for this purpose. But he keeps pointing this one out. He's like, look what happened. It's going to be the same pattern. And then from that point where it got within just like a chip of that all-time high, it then turned around and dropped 41%. So again, there's no guarantee that gold's going to keep going, higher in the short term. Gold can drop by 40%, just like anything else in the markets can drop by 40%. So gold's not immune to that kind of thing. But I personally don't think that this is going to play out exactly this way again. I mean, it kind of looks similar, and probably there's some downside, but I think what'll happen here is that, we've got some uptrends. We've got some, a higher low, a higher low, a higher low. So we're in this higher low situation. And it wouldn't surprise me to see gold, come back down and bounce off of this line before, making another run. And it could do that, a whole bunch of times before it actually ends up breaking out and making that brand new all-time high. So unfortunately, I think this breakout has probably run its course, and now what needs to happen is that gold needs to come and settle back down. Maybe run into some moving average support, or just consolidate and find some support before finally making a new all-time high. That's kind of what I think will happen. I don't think I'm going to lose my bet. I don't think it's going all the way down to 1400 before it makes a new high. I really don't think that'll happen. But this breakout from this level here, I mean, this is a breakout. Right, as soon as it got above this level right here, I think you can call that a breakout. And I mean, it went up 10%, or call it 12.5% from the point where it really broke out of this wedge. And I mean, that's a good run for something like a currency, for gold, for example. I mean, this is not Bitcoin, guys. Bitcoin is a different thing, and it's far more volatile. And gold and Bitcoin are not the same thing. I mean, they both store value, but like you were saying a minute ago, Bitcoin is a risk-on asset. Gold, I once heard somebody say gold, and I wish I could find this because it was. I'm gonna butcher it, but gold is not an investment. Gold is a decision not to invest. It's a decision not to play the economic games that are going on. And gold is a standard of value that's been around for thousands and thousands of years, and that's probably not going to change just because Bitcoin exists. And I think that's true. I don't think gold's going to go away. I don't think everybody who owns gold is going to sell it and buy Bitcoin. If they did, the price of gold would go so low that guys like me who love Bitcoin would be buying gold.
Right.
I mean, it's not going to go to zero. It's just not going to happen. I don't think Bitcoin's going to go to zero either, for that matter. So I think they're both viable. I think they're different enough from one another that that both can be viable in the long run.
And what do you think, with Bitcoin and other cryptos, there's been some of this talk of now a digital US dollar. And then also you had Canada where they seized assets. And, with crypto, it's always so interesting is that decentralized ledger. So, taking out that central counterparty that could go in and seize assets. And instead it's set up so that everyone kind of has their own ownership without any form of government intervention. Do you see what's going on as a catalyst that could get crypto really going again, or what are your thoughts on that?
So I do believe in the long-term viability of Bitcoin, and I think that the biggest case for Bitcoin is that no matter what, nobody can stop you from sending me Bitcoin. Nobody. It's just not possible. There's no assets to freeze. There's no server to go take. There's no CEO to throw in jail. There's just, I don't care if Putin and Biden and Xi and Zuckerberg and Bezos, they could all agree, that I sent you 100 Bitcoin. I wish I could send you 100 Bitcoin, but $100 in Bitcoin, whatever, right? But if I sent you $100 in Bitcoin and all of those guys decided that they don't like that transaction shouldn't have happened, that transaction should be illegal, whatever. There's not a thing in the world that any of them can do, even if they all agree to stop that transaction from happening. They can put you in jail. They can put me in jail. They can penalize us, right? They can do, but they can't stop the transaction like they can in the banking system using the SWIFT program. And SWIFT has been in the news lately because the U.S. is essentially unilaterally decided to use it to impose international sanctions on Russia, which I think is the biggest problem. I don't look. I'm an American and I love our country, but I don't think it's very appropriate that we can impose international sanctions using the SWIFT system, totally circumventing the UN and other international bodies just because we don't like something that somebody's doing. Now, granted, starting wars and invading other sovereign nations is totally wrong. I'm not saying it's not wrong. Nothing like that. I just think at the basic level, the fact that we can do that gives a lot of other countries an incentive to say, well, I want to get away from that. I don't really want to be controlled by, the United States legislating its own morality, or the United States, printing so many dollars because they have control. They're the only country in the world that can print dollars. So it makes every dollar worth a little bit less when we do that. And having the US dollar as the world's reserve currency, I mean, it really, we export that inflation to a lot of other countries. And so, in the same way that somebody once said that gold is a decision not to invest, I think Bitcoin is a decision to opt out of, the United States monetary policy, which I think a lot of countries would probably like to do. I mean, mostly our enemies, certainly Russia, China, Iran, places like that. They don't want any part of the U.S. dollar if they can avoid it. But a lot of times they have to use it because the counterparty won't accept their own currency. So anyway, ultimately I think Bitcoin is long-term viable. You see the line on the chart that I just drew here for Bitcoin kind of says 28,760 is the low end of the range right now. And so, I think as long as it stays above that, it's still probably going to trend higher. That's another 26% down, right? So again, that doesn't seem like that far on the chart compared to what we were just looking at with gold, but Bitcoin is a lot more volatile. And same thing kind of from here. Just to get back to its all-time highs, Bitcoin would have to go up 76%. So I think I'm not buying Bitcoin yet. I think it could easily go back to 28,000. It certainly hasn't broken out of any type of range right now. So on a technical basis, I don't think it's a great buy here. But it's starting to make these higher lows, and depending on how you want to draw, draw the line there connecting those things, it's trending higher. And you could draw, some lines like this as well. And you can kind of see like it's consolidating around a range. And, when it's done that before, just say back here, right? When it finally broke out, it got going. And from there, shoot, it went up, almost 80%. So not too much different than the pattern we're seeing right now. It could easily break down from this range too. I mean, it doesn't have to stay above 28. If it drops below, we probably can go all the way back to 10 or 11,000. And I wouldn't rule it out. I mean, Bitcoin's dropped 80% more than once in its history. So anything's possible in the Bitcoin market.
Yeah. I think it'll be interesting to see where that consolidation resolves to, but hard to pick a spot right here. So just kind of let it work itself out.
Do you trade Bitcoin?
I've done a little Ethereum, but to me, I don't understand it fundamentally well enough. So for me, it's, looking at the chart, and if the risk reward is favorable, I'll get in there.
Yeah.
But,
well, prices are really the only thing that matter anyway. I mean, it's nice to have a fundamental long-term thesis on a stock or on a sector, or, if the oil markets are going up, then, it's probably smarter to trade oil stocks and that kind of thing. But I don't know. I mean, prices are kind of the king. Not that the market is efficient or anything. I'm not one of those guys who think that the market is so efficient that we should just buy a bunch of ETFs and forget about trading. Um, I don't think it's efficient in that way. But I do think that prices tell most of the story as to whether something's trending up or trending down. Again, this blue line, this light blue line here is the 200-day moving average of Bitcoin's closing price, as you know, Kyle. And as long as we're under that, I don't think there's any real good reason to get aggressively long. I mean, even if it broke out of this range right here, it would pretty quickly run right into this level and maybe turn around and stop. Um, as that normally acts like some resistance. So until
Yeah.
we get above the 200-day moving average, I don't think there's too much reason to get aggressively long.
Yeah. And I think what's always important is that technical analysis, reading the price action, it's not an exact science, but what it does do is measures risk reward. And right now, entering on a consolidation like this, the risk reward just really isn't that favorable. Because if you wait for that breakout, yeah, you might miss a few percent, but more often than not, it'll break out, retrace a little bit, provide for a good entry, and then you can just let the market tell you where it's going.
Yep. And use a tight stop.
Yep.
That's pretty much that's all I do in my personal accounts, right? I buy breakouts with tight stops, and when I'm wrong a little. And it happens a lot. And when I'm right big, and it happens infrequently. So it's a lot of small losses and a few really big wins. And that's pretty much all I'm trying to do with my own personal trading. And I guess, for those of you who don't know, who are watching this, yes, I manage all the Elevate Capital portfolios, which is, a little over $100 million. I don't know how much it is now. I guess it's a bit over $100 million. We don't do too much active, trading. We do active investing, but we don't buy breakouts and sell them later in the same day because they made a new low price for the day or anything like that. That's the kind of stuff I do in my personal account. So it's important to separate the two things. Unfortunately, when you're driving a ship like the size of the Titanic, they don't turn around quite as quick as when I'm trading my own little personal account, which is much smaller in relative size. So anyway, those two things are different. And Kyle, of course, isn't actually a portfolio manager at Elevate, but he does have his own personal accounts, and he's a trading junkie just like me. And so he's probably always in a position one way or the other. Do you short a lot of stuff, Kyle? I don't think we've ever talked about that, but do you look at it like, are you as inclined to sell something short as you are to buy it on the long side? Do you like have a preference, or do you care one way or the other?
So interesting topic. I always, for long term, go long. And the reason being is that you have infinite upside, whereas downside is limited at zero. So, I would call myself a long only investor. But when it comes to trading, I'll trade options. So I don't short the actual stock, but I like doing options. And part of that too is the fact that, when we talk about how do you price an option, when you get a nice run up and implied volatility, which is a big component of the pricing of an option, starts to get cheap, it's a great way to get short. So, it kind of brings it back to just big picture, but, look at S&P right now. This is not a time where I want to be buying put options because everybody's scared. They're trying to figure out what's next, and there's a price that you pay for that. But love it when you get a run up into kind of former resistance and everybody starts getting a little excited, thinking that the world's going to be okay. It's a great time there where that's where I'll trade options. So I'll get in when options are cheap for the implied volatility and try to trade those down. But right now, with the VIX elevated, not really a time where you want to be buying a lot of options. You could be right on direction and end up making nothing. So
Yeah, I think that's interesting. Well, let me see if I can pick what's a good stock to pick right now. Let's pick Tesla. So, for me, I shorted Tesla the other day in my personal account. I shorted it right here because it broke when it rallied up above this 200-day moving average, and then it dropped below. And below the 200-day moving average and you know, in a downtrend, you could look at the downtrend as being even further than that, you know. But it just keeps making, you know, just like that chart we looked at on the SPY. I mean, you know, here's the all-time high. Let's see, make that all-time high. So here's the all-time high, and here, you know, it made a lower high, and then here it made another lower high. You know, and here it made another lower high, and here it made another lower high, and here it made another lower high. And all this time, like pretty much up until this is the end of the year here, right? So Elon Musk was selling, oops, I guess that didn't work. But Elon Musk was selling some of his shares all the way until the end of the year. That's why it started. You know, this whole downtrend here was Elon Musk selling his shares to pay, you know, a ton of taxes. And when he finally stopped selling shares, it ripped higher. But the funny thing is it ripped higher and it made, you know, it didn't make a new high. It's kind of like gold when we were looking at it, right? Like when something gets that close to its all-time high and fails, it's not usually a good sign, you know. And so now, basically the stock has pulled all the way back to its 200-day moving average. And you can see back here, you know, it dropped below briefly and then rallied above, below, and, you know, ultimately the 200-day moving average became support for a nice big run higher. In fact, you and I had a bet on this one, Kyle, on selling covered calls at 1,000, which is it turned out to be a good trade. But anyway, back to what I'm talking about. To me, this is just a bearish situation, and may it bounce off this 200-day moving average and rip higher to a new all-time high? Yeah, sure. And what you know, what made me bring this up is you said you're exposed to unlimited losses when you're betting against the stock, because this thing could just go up. You know, it could go up forever. There's no limit to how high it could go up. It could go to $2,000, could go to 3,000, could go to 5,000, like Kathy Wood predicts, or maybe that's Rob Barron. I don't remember. One of them has like a $5,000 price target on Tesla, which is just silly. But the point is that I will put my stop on something like this. I put my stop right here at that recent high. So like my stop on the shares I sold short here is 859. I think it's actually 856 or something like that is what I have it entered as in my trading software. So as long as this thing keeps going down, and you know, I'll be looking for it to break, you know, this here. So right now it's just in this range. I'm hoping that it will go down and, you know, hopefully make another new low. That's basically, you know, say I can, let's just say that that's where I think it's going to go. So I'm risking, you know, say from here, I'm risking 2.3% up to where that stop level is. 2.4, call it 2.5% to make, why won't you, to make, you know, 17%. That's a pretty good risk reward, you know, 17 divided by 2.5. That's six times, 7 times my risk. So I think that's a good risk reward, even though what you say is obviously true. Like I'm exposed to unlimited risk because the stock could keep going up forever. But as long as I follow my stop loss here and sell it if it goes above that price, then, you know, I'm limiting my loss. And of course, the most you can make on a short sale is 100% because Tesla can go down to 0, right? Maybe we'll find out that it's a fraud, just like Enron was, and maybe Elon will even go to jail. I think I have a bet with one of my buddies that Elon will go to prison before I die as well. I think we bet a beer on that. So.
And you know, you bring up just an interesting point is in all these trades when we're picking it, what's always just so fascinating is, you know, when I first started trading, it was I want to be right 100% of the time if I just learn a ton. And what you find is if you measure your risk and you see the reward, I mean, Shane, I don't know what your stats are, but you know, you could certainly be wrong and maybe this thing just goes to the moon, but measuring that risk reward, putting that stop in, you manage the risk and long term, it works out. And we're going to be wrong a lot, but you still make plenty of money.
Yeah, I used to hate the current sort of strategy that I follow in my personal accounts. Like who wants to be right only 30 or 40% of the time? I mean, you're usually wrong. Like I like being right, I don't like being wrong. I don't care how much money I make. Being being wrong used to like really, you know, uh for lack of a better term, I used to depress me. Like I would be depressed just because I was wrong all the time, or felt like I was wrong all the time. But the more I've done this and the more I've learned and studied trading, the more I've gotten comfortable as a person with being wrong more often than not, but still making, a decent return. This year has been great. Um, End of last year was pretty good too. So I'm not bragging. I'm just happy that, it's kind of starting to go the way that I had always hoped it would. And I've been able to kind of shift my focus from being very bummed out about being wrong all the time to just being happy that, I'm making money while, the entire rest of the market is down pretty substantially so far for the year. So
Yeah.
um,
And
go
something too, just I wanted to touch on, but tying it back to just how we kind of look at money management as a whole within Elevate is when we set these targets, or we've talked about this a couple times now. Well, gold set a prior high a year and a half ago, or Tesla set this other high. If we're on the long side, we'd love to see it just go on forever, but sometimes we will sell partials, right? And that's kind of how we get to a cash position. We're not top pickers and we don't know exactly where the markets turn, but if we can figure out where a lot of people are going to try and get rid of some of their shares, we can do that too, and just helps us manage the risk overall.
Yeah, in fact, I know we don't have a ton of time left, but it's worth getting into. Like these are, I don't know, hopefully you guys can see these vertical lines, but this is a position that we actually have in um, our strategies at Elevate. So this isn't a personal account trade. This is a professional account trade, if you want to call it that. And we have XLE, the oil and gas or energy ETF, uh, as an allocation in both our value and growth strategies. I think we've got a little bit more allocated to it in the growth strategy than value, but we're using essentially the same stop loss for both of them. And so what you see is so this is our entry point. We entered this trade after oil was already up 83% from its lows. And I'm sure that's from the point where oil cost negative money that we looked at earlier. And it just kept rallying and was showing no signs of slowing down. And so we finally, reluctantly, we took a stab and we were like, hey, looks like oil is going to keep going higher. And it looks like these oil and gas energy stocks will, they'll be able to make a good return for their investors, even if oil were to go down a little bit, right? As long as it stays above a certain level, these oil and gas companies can do well. And so we decided to buy it. And of course, what happened as soon as we bought it was the price went down. Went down a bit, but it stayed above this purple line here, right? For the most part, it just, it kept just making higher lows, higher lows, higher lows. And so it was trending higher. And so we felt comfortable buying it. So we bought some here, we opened a position, then we added after it dropped a little bit. We added when it bounced off its 50-day moving average. We added when it bounced off of this trend line. We added again when it got above the 50-day moving average again. Here we sold some calls. So each one of these yellow dots, it means that we sold covered calls, which for those of you listening who don't know, I know Kyle knows, just means that we agreed to sell our shares at this level. So on this day, right, when gold had peaked and started dropping, we sold covered calls that would have obligated us to sell our shares up at 60 when the price of oil or the price of XLE was down at 52. So, we would have been happy to sell for 60 what was currently trading at 52. Turns out we never ended up having to sell at that price. And actually all these other covered calls, we never had to sell at either. But every one of these vertical lines, it shows you every time that we added to the position, every time we sold covered calls, and the red lines are every time we trimmed the position back. So when it finally broke below this trend line, that's a bearish situation. We didn't close the position, but we had some profits on the position at that point because we were buying at the lows, right? And so anybody who was over allocated to oil in our book of business would have trimmed some of their shares, some of their exposure there. They would have taken some of their profits off the table. And then it kept going lower and lower. So we trimmed it again. If there was anybody who was overweight here, which there probably wasn't, because at that point we were actually down on XLE. But see how when it drops below the 200-day, we get a little bit more cautious. So we trimmed some of our shares. When it finally jumped back above the 200-day, we added again. Interestingly, what you'll see here in this green box is in that green box, you'll see all the different moving averages get super tight together. And that to me is a big signal that we're going to break one way or the other. Doesn't mean we're going to break up, doesn't mean we're going to break down. It just means that these moving averages are probably not going to stay in that tight of a range for very long. They never do. And in this case, it broke higher, right? We saw this big green candle here and then another one, and we bought on both of those 2 days because that to us is a breakout. We see that moving average consolidation and then a break higher for the stock or the ETF in this case. That's just a big bull signal. That's the kind of stuff that I trade in my personal accounts. So that's a breakout, and we look to get long those things. So you see that we added on that. We trimmed once we got the very first kind of move, trim some of those profits, sell some covered calls here as the stock kept going higher. So here we sold covered calls all the way up at this level, and XLE stopped going up so much. So anyway, since you mentioned that we do sometimes trim positions, XLE is one that we trimmed just the other day because, of course, with the price of oil going as high as it has over the past couple of weeks, it just probably won't continue going straight up. It'll probably pull back to some other level. And we've got some nice gains from the last times we were buying it here. And we did buy on February 25th before it started its most recent run higher. You see that buy on February 25th. From that point, oil went up 11%. So for anybody who bought on this day, they're already up 11% just a few trading days. Makes sense to trim some of those profits, but ultimately keep the overall position. So that's how we manage money at Elevate. And everything is there for people to see. Sometimes we're right, sometimes we're wrong. We can't predict the future. So
no, we
questions?
Just to wrap things up here in terms of kind of what we're thinking big picture, so I think we have some cash on the sidelines. Are you feeling optimistic yet, or are we at a point where still playing a little defense and waiting for that signal?
Yeah, so I mean, there are various stocks like, we're taking shots on some certain things. Here's one we recently bought, right? Here's the Pfizer chart. If you take back the long term of the Pfizer chart, ever since March of 2021, Pfizer in the long range has been making higher lows, right? Bounces off of this line here. So far it's bounced off of this line here, and it's bouncing off of the 200-day moving average and going higher. So this is a downtrending channel. When it breaks higher out of that channel, chances are it's going to keep going higher. So, we bought on this day, on March 4th, we bought some Pfizer. It initially, tried to make a fool out of me. But, again, bounces off the 200-day moving average and goes higher. So we took a starter position in Pfizer here, and we'll look to add to it. I think I might actually add to it today. As it goes higher, we'll look to make that a bigger and bigger position. But you can see too that it's all about risk reward. So let's say we bought this stock. Let's say we even bought it at the highs. So we'd be risking a total of 7.23% on Pfizer on the downside. If it closes below this level, we would sell the next day. So we're risking 7. And if it just goes back to its all-time high, that's up 26.98. So 27%. 27 divided by 7. So we're basically at a 3.85 risk reward to risk ratio, right? We're going to make 3.85 for every one we could potentially lose. Anything over 3-to-1 is a good trade. You only got to be right 30% of the time to break even, and if we're right 50% of the time, that leads to a lot of gains. And our win rate is higher than 30%. I don't know exactly what it is, but it's probably higher than 50%, to be honest. I just haven't looked, so don't quote me on that. You haven't looked, have you, Kyle? Do you know?
I haven't looked, and I just always caution people is that we've been in a bull market for 11 years, so win rate can certainly change. If you get
Yeah.
a nice bull market like we've had, I mean, anyone in a way sometimes can throw a dart at a dartboard and do pretty well, but it's when the bear market comes, then your win rate might go a little lower.
Right. So, I mean, we're taking a few shots. We're allocating capital where we think we have a little bit of an edge, and the odds are actually in our favor. But if you look at SPY, I'm on the wrong chart. Sorry, give me 1 second. If you look back at SPY, right, the overall market, no, I mean, I'm not bullish. I'm bearish. I think that well, this yellow line here that would represent giving back 100% of the gains made in 2021, which was silly. But from back here to up here, market was up 27% roughly, and we could give back all of those gains, because this right here is only a 12% drop from where we're at currently today. And it's really only a 9% drop from the lows back on February 24th. So, for me, I'm not real optimistic that the market is done going down. I think the Federal Reserve will raise interest rates into a slowing economy. GDP is slowing. Inflation is extremely high, but I think it's going up at a decreasing rate. And so for now, I think the Fed's going to raise rates into a slowing economy. Before a couple of months from now, they'll be able to say that inflation is moderating and kind of back off of their rate hike regime. And the biggest risk right now, we didn't get to it, maybe we'll get to it next time, is that the Fed will actually start reducing their balance sheet. The last time the Fed reduced their balance sheet was in 2018, and 2018 was the last time that we saw a down market for a calendar year. So I don't know that the market will be down for the year, but I think the market's going to be under some pressure for a while as the Fed begins to raise rates, and then maybe even starts reducing the size of the balance sheet. So for me, I think for at least the next couple of months, what's that? This takes us out to May 5th right here. So I think between now and May 5th, we could easily drop another 10 to 12%, completely erasing all of the silly gains from last year where meme stocks like AMC and GameStop were, the best places to have your money, which is ridiculous. I think we can erase the whole year like it never happened. And then at that point, the Fed will have a meeting, I think on, I don't know what day in May. I can't remember what the actual date is, but when they have that meeting, I think there's a chance that they'll come out and say, okay, we're done raising rates for right now. We raised rates twice and we're done. And from that point forward, that's, if it doesn't happen before then, I think that's when the market will put in its bottom and start rallying much higher. So, I don't know. I can't predict the future, and we're certainly, that's not what we're banking on. We'll react if the market puts in a higher low before then we'll start buying. If the market gets back above its 200-day moving average before then, we'll start aggressively buying. And all along the way, we'll be looking for other stocks like Pfizer, to take some small risks. Maybe not necessarily picking the bottom, but this is a pretty good setup. So, just because the overall market is trending lower doesn't mean that there aren't pockets of bullish signals.
Right. Yeah. So it'll be interesting. I'd like to see the S&P close over 4,400 before I say, hey, we're bullish. But, we could be totally wrong on direction. But I think right now it is time to play a little defense, and we'll see where we end up.
Holding some extra cash feels pretty good with all the headlines out there right now and all the Fed risk coming. So
it does. Always nice to be on the position of shopping and not trying to, sell out of things in a panic. So,
Or try to talk our clients into, riding the roller coaster as if you can't time the market. Obviously, you can time the market. I mean, if you know the stuff that you and I know, you can time the market. You can't do it 100% of the time. You're not going to be right 100% of the time, but you can time the market, and you must time the market if you want to get anything other than an average return.
Absolutely. You have two choices in the end. You can either waste time or money by holding on to losers. So always good to kind of get out and manage that risk. So, well,
all right, I'm heading to the golf course, brother.
Awesome. Well, you have fun out there and enjoy your weekend.
All right, stay tuned for disclosures, y'all. None of this was a recommendation to buy or sell, if that's not clear.
Awesome.
All right, see you next time, man.